Hello, everyone. Welcome to Paygilat's webinar. Before we start, a few housekeeping rules. This is a Zoom presentation, so please keep your sound on mute. All the time, please keep it on mute. If you have any questions, write them down on the chat, and we will try to answer them later on at the Q&A session. And if you have a private question, please reach out to us after the webinar, and we will return your query as soon as possible. So let's start. COVID-19, wow. Last 3-4 months have been amazing, incredible. They've been challenging. They've been very difficult for many of us. The outbreak has brought a real drastic change in our lives. And by every measure, we are going through a great crisis. As a result, the world is changing. Human behavior is changing. Banking is changing. Across the globe, challenger banks are growing rapidly, chipping away at the market share of traditional banks. Welcome to Paygilat's webinar. I'm Yossi Geller, and I'm here with Asa Zeidman, the great Asa Zeidman, and we will be discussing challenger banks post-COVID users and fraud. Today's webinar will cover several issues, and one of the main issues is how COVID is impacting banking. The shift to challenger banks and neobanks will be discussed, the challenges of challenger banks, and how challenger banks can achieve it all, and they can. And then at the end, we'll have a Q&A session so we can get your questions. Before we start again, I'd like to give a little bit of background about Asa and myself. Asa Zeidman wears the intelligent hat at Paygilant. He's the bright one. He's the smart one. He's our VP of products, and he shapes the direction of all our creations. Asa's wisdom comes with a wealth of experience in fraud, crypto, cyber. He's been there. I'm Yossi Geller, and I'm the VP of marketing, and I wear the creative hat. I too have worked for fraud, cyber companies throughout my career. So how has COVID impacted banking? That is the question. And the two-word answer is digital banking. Digital banking is on the rise. It's really on the rise. And so is fraud. So it is increasingly clear that the entire banking ecosystem and the way consumers interact with financial organizations has been shaken to the core with COVID-19. And it is my opinion that banking will never be the same. Asa, what do you think of this bold statement that I just made?
Well, it is bold, and I agree it will never be the same, but I think it would have changed anyway. Maybe not that fast, maybe not that extremely, but nothing can really change the shape of things to come. And in a second, we'll see how this direction started even before that, and it would have, I believe it would have gone in the same direction anyway, but now it's just a guess. We'll never know, wouldn't we?
Yeah, but we can see that there's been a significant major change during this period and a huge shift towards digital and mobile banking. And a recent survey has indicated that approximately 35% of consumers have adopted online banking since the beginning of the pandemic. That means 35% new customers. That means that people who have in the past not dealt with digital banking are doing so now. That's incredible. That's really quite remarkable. And if we look at the past 3 months, we see incredible statistics, like a 200% jump in mobile banking registrations or 85% in mobile banking traffic. These are remarkable numbers. So that's really something to think about. Another indicator that people are shifting to cashless alternative is the significant drop in ATM withdrawals. People are simply not going to the ATM. Today, folks are reluctant to go to their branches and are hesitant to withdraw money at the ATMs. In general, the use of cash and paper money is on the decrease and has become very, very, almost obsolete. Online and mobile has become the real alternative. What we are seeing with COVID is a huge increase in digital and mobile transactions. But what else we're seeing is a huge increase in fraud. This is very, very important and very interesting. Just this month, the FBI issued a warning to bank mobile app users that they must beware of fraudsters. So perhaps you can talk a little bit about the actual shift to challenger banks and neobanks. What's going on?
Well, when you're looking at it, you could see that even prior to COVID-19, challenger banks were already gaining momentum. The popularity has increased tremendously in the past 3 years. And when you look at it, you must think, what are the main reasons for this shift to the challenger banks and neobanks? So the first I would say is probably regulation. The establishment of new regulations has contributed to the growth of challenger banks, like Basel III, for example, as it allows the challenger banks, which are licensed in the EU, to provide branchless services in other member countries without additional authorization. I believe it's called passporting. And for example, you could look at the German fintech Van26, which has leveraged this opportunity and entered more than 17 additional countries after obtaining the banking license from the German financial authorities. And you could see also other regulations, such as electronic money regulations and PSD2, which have contributed to the regulatory shift to opening challenger banks. In addition, there is the factor of the consumer behavior. Today's banking consumer wants more than standard banking services. The conservative nature of legacy banks negatively impacted some banking consumers. Many new customers are looking for more personalization, less red tape, less service charges, less transaction fees. The need for simple and easy transactions has also been a major factor in the shift to challenger banks. You see how millennials, Generation Y, expect their banking to be as easy and simple as any other interaction, and it makes a lot of sense. What makes banking so different from any other service? And of course, eventually we had the COVID-19, which I believe accelerated this transition, which I believe would have probably happened anyway, but COVID has probably made it much faster than it would have been otherwise.
I tend to agree with you, Tessa. I think that is absolutely true. Yes. Now, perhaps you can, get into the issue of the challenges of the challenger banks. What are their main concerns?
Well, one of the largest challenges posed to the challenger banks is their competition, and I don't mean the competition within themselves, but rather the competition with the incumbent banks. The heavyweights have realized the advantages of having an easy-to-use application, and they're going for the Me Too strategy here. Now, the layman may think, what's the difference? I mean, both companies have a mobile app, but this misses the fundamental differences between the incumbent bank and the challenger bank. Now, the largest banks out there, like Wells Fargo and Chase and others, are telling their customers to bank virtually, listing their mobile banking application before the same bank's online alternative. So here you can see how the incumbent banks are not left behind. They're already caught up, and they're providing quite similar service to the layman. A second issue here would be trust. Now, had I been a challenger bank, I would like to achieve growth domestically and then worldwide. And in order to achieve this growth, I must first achieve trust. And by trust, I mean in the deepest meaning of it. The incumbent bank today has a brand reputation which was built over decades. Its financial stability is almost unquestionable. Now, as a challenger bank, my potential customers might be worried about solvency. Also, as an incumbent bank, my commitment to security is well known. I have a dedicated team to handle security, to handle fraud. And as a challenger bank, well, I'm a small, lean, young startup. I have a small team, and I probably won't have a large dedicated team to handle fraud. So as a challenger bank, I would need to provide proof. I would need to put in a lot of effort to gain this trust with my potential customers. especially when it comes to financials. And eventually, we have the customer experience as a challenge here. Now, again, the incumbent banks know this well. According to a McKinsey report, customers who are highly satisfied with their digital experience are 2.5 times more likely to open new accounts with their existing bank than those who are merely satisfied. And they are also less sensitive to price, and they would generate more positive word of mouth. So as a challenger bank, I'm expected to provide a superb experience, and that is probably what I do, and I would even aim to have the perfect frictionless experience.
So do you actually see it as a trade-off that the challenger banks must take between fraud prevention, user experience, or user privacy? Is that how you see it?
Well, the common perception is that you can't have it all. Nothing is perfect. And if you choose in favor of one thing, it has to be on the expense of the other. That's what we're used to today. And when looking at the challenges of the challenger banks that we have just discussed, this can be seen as well. As a challenger bank, I would want to prevent fraudulent activity in my app. So I would gain trust and also prevent loss. I would also want to provide a superb experience, a frictionless one, not asking the user for anything if I could. And I would like also to maintain the user's privacy, meaning not to ask the user for information that might make my user feel uncomfortable. Now, the accepted approach today is that one thing would be on account of the other. For example, if as a challenger bank I would wish to prevent fraud, then I would probably need to challenge my user with all sorts of step authentication methods, thus harming their experience, and also asking them for more info. A good example would be one-time password, which is another obstacle in the user's journey. And when asking the user for more information, the user feels less comfortable because he is asked to provide more information.
It's often annoying to get a token-based request.
Well, even if you're a dedicated customer, it's when you come to think of it, it requires real effort. You receive the text message, you now leave the application, go into your messaging application, see the 6-digit number, remember it, go back to the banking application, and then typing it in. And that's in case that you remember the 6 digits. And that's not that easy. And as we'll see in a few minutes, it's not also perfectly safe. There are some issues with it. But when you look also, if we're looking again at the experience, if I want to provide a frictionless experience to my end user, I would have to avoid all kinds of fraud prevention methods. And then I might be exposing myself. And again, if I want a perfect user experience where I collect data behind the scenes, well, now my user might feel a bit uncomfortable because, if I want to be perfect in terms of user privacy, I should be fully exposing what I'm collecting, and I need to collect it out front, again, harming my user experience. So it seems at first that you can't really have it all, but can't you have it all?
So you really believe that you can have it all?
I think we can have it all. Oh yeah, I believe we can have it all.
All right.
Yes,
So
we can have it all.
Let's see if you can prove that.
Well, let's see.
Yeah. So from a challenger bank perspective, do you talk about fraud and the concerns of fraud?
Well, you've mentioned earlier, and quite righteously, that fraud has spiked in Q1 2020. I mean, 55% incline is quite a lot. And I must say that we're seeing this as well. From our point of view, we're seeing this, and we're seeing this also with challenger banks. And when it comes to challenger banks, we see 3 main attack scenarios being performed upon the challenger banks. The first one would be the new account fraud. In a couple of words, the new account fraud is where I, as a fraudster, I obtain fake or stolen identity data in order to open a new account at the challenger bank. Now, why is that so important? Because once I have established an account, I'm scot-free, meaning I'm already being considered as a legitimate customer, and now I can exploit a service. I can now perform, for example, transaction fraud. I can take a stolen credit card, I can top up my account with money, and then I would transfer the money to other destinations. So in this way, the challenger bank who suffers from the new account fraud has a problem here. And it's important to remember that KYC is a regulatory tool. It's not an anti-fraud tool. I mean, it's done by obligation in order to know who your customer is, but it would not really prevent fraud. And if I, as a fraudster, manage to go below the radar and create a new account, and there is nothing that follows me afterwards, then it is a problem. It is a real problem. And that takes us to another fraud scenario that we're seeing with challenger banks, and that's the account takeover. Now, account takeover has been with us for quite a time, and it's becoming actually much more interesting. It's quite enjoyable to look at, I must say. In the account takeover, as a fraudster, I'm stealing credentials of an existing customer, and I'm using these credentials in order to log into that user's account. And then once I took over that account, I'm now in control. I can now liquidate this account. I can send money to myself. One of the tools which are very common to use against the account takeover is, again, the one-time password, meaning the user is being asked to provide a username, provide a password, and then some kind of a text message is being sent to that user's mobile. The user types in the code and he's in. But we have seen some interesting attack vectors which can bypass the one-time password. And a good example is the following one. There was a group of fraudsters which got a hold of usernames and passwords of a specific bank. Then what they did, they've contacted the victims directly, the potential victims, the bank's customers, and said, they imposed to be representatives of the bank and said, "Hi, we're from bank so-and-so, and recently we have seen suspicious activity in your account, but before we dig in, let me make sure that it is indeed you. I'm going to send you a text message. Could you please read it out loud to me?" And then they started the login process. They entered the fraudsters entered the username, entered the password, and then the victim has read out loud the one-time password. At that point, the fraudsters typed in the one-time password, and that was it. They took over the victim's account, and they even made the victim feel better, saying, "Oh yeah, we see, don't worry, everything is okay. Even if you would be contacted later by another representative of the bank, it's okay, do not worry." And that way they took over the user's account despite using the one-time password.
Now, are these type of account takeovers common? Do they occur frequently?
Yes, they are. Usually you can see how the fraudsters tend to attack the weakest link in the chain, which is usually the end user. They try also to perform social engineering on the mobile providers by performing a SIM swap. But sometimes you can also see how the fraudsters attack directly the bank. And we've seen that type of attack, something very interesting. There was this challenger bank, which provided the login process by enabling the user to enter their card number as a username and a 4-digit PIN code as a password. Now, naturally, they have limited the number of passwords, the number of PIN codes, the number of trials you can try for every card number. But what they did not block is the number of user IDs per password. So what the fraudsters did, they took one single passcode, let's say 1234, and then they run a whole bunch of card numbers on that code until eventually they've got hits, and then they took over these accounts.
That's really quite remarkable. Wow. Wow.
Yeah, and it was quite a hit. That bank got a six-figure hit over there. It was nasty.
Whoa. Can you expand a little bit about challenger banks and in relation to customer experience?
Yes. Well, you might think that, or you would have expected that, challenger banks, being startups, being lean, being young, being agile, would have the best customer experience in the world. But when you look at the numbers, you're seeing that the situation is not that clear. If you look on the left here, you would see the number of clicks required to make the first payment. And you would see that banks such as HSBC and Lloyds require less clicks than Monzo or Revolut, meaning that the incumbent banks have caught up. They're not behind anymore. They are well aware of what they should do, and they're doing it. And when you ask the potential customers, what is the one top reason that would make you adopt a challenger bank solution, you see that only 11% say better experience. Now, you would have expected that it would be much larger, but it's not. And here, it's a good question. Why is that? And it's not that clear because is it because the customer experience is just not good enough? Is it because that the traditional banks have caught up? Or is it, because it's really not the challenger's bank, let's call it fault, because they are in this infinite tension, this trade-off between trying to block fraud in order to maintain trust, in order to achieve growth, and having a good customer experience. And, it can be, I can only imagine that as a product manager of a challenger bank, I would see the reports one day and I would say, oh dear, the conversion rate is going down. We must improve it and improve it at once. So let's take this specific security measure off, and then a couple of days, hopefully it would be a couple of days, usually a couple of months later, I would be hit by chargebacks. And then I would say, oh no, what have we done? We must return these security measures. And then again, I'm hurting the customer experience. So it's like this vicious circle. And one would expect that, hey, that's life. And you can't have it all. But again, I say maybe, just maybe you can have it all.
So that was the point when you, in the previous slide, when I asked you a question, do you really feel that you can achieve it all?
It's not a matter of feeling, it's a matter of knowing. You can achieve it all. Now, it's not easy, it's not simple, it's not some something that you can do with one hand behind your back. It requires effort. And I can provide here some very useful tips to the challenger banks of how you can do it.
Please do.
So, as a challenger bank, once I see an interaction with my mobile application, I should have a very wide perspective. I should look at this action in the widest way possible. First of all, I would look at the device which is interacting with me at the moment. I would need to identify in real time whether it's a returning device or a new device and treat it accordingly. Now, if it's a new device, is it a legitimate device? A good example here would be an emulator. An emulator would not be a legitimate device. If I, as a challenger bank, see an emulator trying to perform an action, I shouldn't approve it. Something is wrong here. A legitimate action would not be done by an emulator. And in addition, of course, I would look at parameters such as the geolocation and the network connection. This goes without saying.
No, wait a second. I'm not clear. What is network connection? Explain it to me.
Of course. Here, you should look, for example, at the IP, which is connecting with you. Is it a legitimate normal IP or is it a proxy? Is it a Tor connection? The actual deeper question here is the device trying to mask itself? Now, if it does, then of course it's riskier than a device which is not. And the same approach should be done at the same time for the user. Asking the same questions that we asked the device, let's ask them on the user. Is it a returning user or a new user? Now, here, if it's a returning user, is it really the same user? I mean, okay, the user provided their username, password, and maybe even the one-time password, but is the user behaving the same? Is the user going through the same sequence of screens and fields throughout the application? Is the user behaving biometrically in the same way? Now, if they're not, then it's probably an account takeover and you should take action. If it is, and it's a good sign, then you do not have to pose any obstacles in front of the user and let the user go through. And here you can use also insights that you get from the application, data that the user has provided, and you can cross-reference it and see if it all makes sense. And eventually, you should look also at the actual transaction, looking for patterns. Let's say an action has been done. Is the amount according to the pattern of that specific user that we always see? Is the destination of the money being sent as a known destination? And the time of day, does it match that user's behavior? And you should look, I believe, not only at the specific user, but also at the general population which uses the app. And of course, you should look at the velocity. Now, it's easy to say if a single user is doing too many transactions in a very short time, it's an issue, but you should look not also on the user, but also on the device. Has the physical device done too many transactions in a short time? So once you look at all of this in real time, you can reach a clear decision whether it's risky or not. And all the things that I've mentioned here do not require any obstacles or any challenges. The user it can be done totally seamlessly.
Yeah, that was really remarkable. That was very good. We're going to take some questions and answers here in Q&A session, and I'm going to look and see what we have here as part of our questions. Let me see for 1 second here. I see a question. It's asking us, how do we do it? What is our secret sauce? Can you expand on that?
Well, what we do here at Paygilant, we actually do what I've just described, meaning we have what we call our 6 intelligence sets. In our 6 intelligence sets, we look at real time inside the application whether the device DNA matches. Device DNA is the next generation of device fingerprinting. We look also at the user's environment, and we can identify whether it's a legitimate user or not, whether it's really a returning user or not. And we can look also at the user's behavior, the way the user is interacting physically with the device, the way the user is going through the application screens, the way the user goes through the application fields. And then we can look also at insights that we get from the application and cross-reference them. And eventually we can look at the transaction data and see if it's really according to patterns, whether the velocity is okay. And this is all done since we have an SDK, a small piece of code which resides inside the Challenger Bank's application. So we can provide the Challenger Bank an immediate and precise risk score. So the application can choose how to act according to our recommendation before the transaction took place. So if everything is fine and everything is safe, then no need to pose any step-up authentications. Just let the user perform the action. And if it's very high risk, then you should naturally decline the transaction.
That's great. Very good. Let me look at here and see another question. Yeah, it's asking about behavioral biometrics. Can you expand and explain what behavioral biometrics is?
Sure. Well, in the past years, we've seen a trend of moving from desktop to mobile. Now, it has its cons, but it has also its great pros. And one of its pros is that the user holds a device in their hand. The user is physically interacting with the device. Now, every person holds a device differently. Some hold with the right hand, some with the left hand, with a different angle. People swipe differently. Some of them swipe with long movements, some with short movements. People press differently. Some press strongly, some press in a weak manner. Now, what we do, we combine all of them into one biometric profile. Now, what's nice about this profile is that it can't be reverse engineered in order to identify the person, meaning if I have a bio profile of a person swiping and tapping and holding the device, I can't know who this person is, but I can compare it to other behaviors. So if I have a new person arriving, I can see and I can compare these bio profiles and know whether it's the same person without harming the user's privacy.
Very good. We have a question here. It's asking, as we know, each app deals with hundreds of APIs. Are you checking API penetrations or any internal, external APIs activities for suspicious activities?
Well, it's a very good question. Here, eventually what we do at Paygilant, we check the last mile, meaning we are at the application level. So let's say there is some sort of attack on the application or on the service, and that attack causes the application to act in a very uncommon manner for any reason. I'll take, let's say, even a very extreme scenario. Let's say I have some kind of malware on your device, and now I have taken over your mobile phone. So now your phone is here on the table, you are in another room, but as an attacker, I now got control of it remotely. And now I start to perform all sorts of actions. Eventually, these actions, if they happen inside the application, we are aware of them, and we can see that things are not the way they should be. Again, a human behavior in an application would be very different than someone remotely taking over a device. So here, we would be able to identify any attack which eventually comes into place in the application.
We're getting a lot of questions, so we'll try to answer them all. Here's a question: are you analyzing each bank's threats separately or looking at the global level?
We're actually doing both because on one hand, every bank and every challenger bank is different than the other. They have different preferences. They have different appetite for risk. Each one has its own preferences, and you can't have one size fits all here. So we do have a tailor-made solution for every bank and every challenger bank that we are working with. However, we do have this common, let's say, a repository of known fraudsters. So if I identify an attack being done at one challenger bank in one continent, we know now of that attacker. If that attacker approaches a different customer of us from another continent 2 weeks later, we will know, oh, we know this guy. We know this fraudster. No need now to reanalyze it. Maybe he's gone to the good side. he didn't. We can identify this fraudster immediately, and we can flag him as a fraudster, and he would get a very high risk score from the start. So we do have here the power of community and still having every customer getting a totally separate solution.
Okay, we have another question here that's asking about the agility or how agile is the solution. Can you expand on that?
Sure. We have designed our solution to fit also challenger banks. Now, challenger banks are usually, again, they're startups, they're lean, they don't have huge teams, they cannot go now into huge projects which would last for months. So we have created our product from design, so the technical integration part would be very quick. And by very quick, I mean 3 to 5 working days tops by one developer. You don't need more than that. The whole integration process from kickoff to release shouldn't take more than 4 to 5 weeks. We have done this before, we can do this again. It does not require that. And most important is that we provide protection from day one. Challenger banks cannot afford themselves now to run for months and wait until our machine learning models get the whole thing. So our protection starts from the first day, as we can identify malicious devices. We can identify malicious users. The models are learning in parallel, but the protection starts from the first day.
Very cool. I've got a question here. What if I'm using a new phone? What happens if I connect as a legit customer from a new phone? What if I'm using a new phone? What is the false positive for your system?
Okay, so of course, a known user with a new phone is a very common scenario. People buy new phones all the time. And here it's a very challenging thing because you know it's a new device, so you might have been a bit suspicious at start, but as we are looking at the user's environment, we can see that although it's a new device, the user's environment is the same. We look at many factors which are properties of the user, and they roam with the user from one phone to another. And we can say, okay, it's a new phone, but it's still the same user. And more than that, our ability to read the bioprofile is across devices. Meaning, if I am now throwing away my old device and taking your device, our solution would be able to identify my bioprofile, although it's different hardware. So a scenario of an existing user arriving with a new device is totally fine. We do not get false positives at that point.
I have a question here asking us to show the product. So I think that we'll take this on a private session because I think that this is something that is a little bit more sales oriented, and we want it to be more education oriented today. Let me see if there's any more questions. And forgive us if we don't answer them all. We will answer other questions directly. There's a question here relating to mitigate sanctions, supervision, and terrorist financing.
Yes, I see it. Well, that's something quite interesting because when we designed Paygilant, we did it as an anti-fraud solution. Now, our tool indeed can know a lot of things, and this knowledge can be used for many things. In addition, it can be used also for policy matters. So, indeed, we enable our customers to have policy-related rules, not only risk-related rules, but policy-related rules. So, as an example, if we have a challenger bank that says, I want to accept users only from my own country, no problem. We would have a policy rule that would flag the user is not from the destination country. Now, we won't flag this user as a risky one because they're not risky. It's not a fraud attempt, but our customer will have this knowledge. And actually, it brings me to another module that we have, which is something that may help the challenger banks, which started to give personal loans. And that's a tool which helps with calculating the credit score. Now, we do not calculate credit score. That's not our profession. But we do have very unique knowledge that can help that bank reach a better credit score, much better than the tools out there, because we know a lot of things that these tools do not know, since we have this very vast knowledge regarding the device, regarding the user, which can help set the credit score. For example, we can know of the user's behavior and the user's history, and this information might be very helpful in order to indicate whether this person is more likely to return the loan or not. This is an additional model that we found out that customers are really interested in.
Wow, that was really, really amazing. Asa, I told you that he would be wise and give us a lot of good information. I think
so you say.
Yeah. So I think that we've reached our time limit, and any other questions that might come up, we will interact directly with anyone. Feel free to reach out to us. We want to thank you for attending, and till next time, we'll be happy to see you again. Have a great evening. Bye-bye.
Thanks a lot.